Hello everyone, welcome to Top Finance. Are you grappling with a limited monthly income or pondering ways to earn extra money? These common concerns frequently go unanswered. In today's video, we will unveil 9 essential assets that could revolutionize your income streams. Stay tuned until the end, as the final asset has the potential to substantially boost your cash flow, possibly becoming a lucrative full-time endeavor. First, small business ownership. Investing in small business ownership, whether by starting a new business or buying an existing one, presents a substantial opportunity for wealth creation. Starting a new business allows for innovation and the freedom to build something from the ground up. Tailoring strategies and operations to the owner's vision. It involves identifying market needs, developing a unique value proposition, and navigating the challenges of entrepreneurship. On the other hand, buying an existing business offers the advantage of stepping into an already established operation with existing customers, revenue streams, and operational structures. It allows the investor to leverage the business's track record, bypassing some of the uncertainties associated with new ventures. Both approaches come with risks, such as market competition, economic fluctuations, and operational challenges, but they also offer the potential for significant rewards through business growth, profitability, and the eventual possibility of a lucrative exit strategy. Number 2, franchises. Investing in franchises presents a strategic opportunity for entrepreneurs to own and operate a business under the umbrella of a well-established brand and proven business model. Franchises come with the benefit of brand recognition, operational support, and marketing assistance from the franchisor, which can facilitate a smoother entry into the market. This model allows entrepreneurs to leverage the franchisor's expertise and resources, reducing some of the risks associated with starting a business from scratch. However, investing in a franchise also involves considerations such as initial franchise fees, ongoing royalties, and adherence to the franchisor's operational guidelines and standards. It requires due diligence to assess the viability and potential profitability of the franchise, considering factors such as market demand, competition, and the franchisor's track record and support system. If the expenses related to acquiring a franchise seem unaffordable, you can still participate by investing alongside others. This strategy allows you to not only gather the necessary capital, but also to minimize the risks involved. Ultimately, franchises offer a pathway to business ownership with the backing of an established brand. But they also necessitate careful planning, financial investment, and a commitment to upholding the franchisor's business model and brand reputation. Next on the list, commodities. Investing in commodities such as gold, precious metals, oil, and natural gas offers a way to diversify an investment portfolio beyond traditional stocks and bonds. Commodities are tangible assets that have intrinsic value and are subject to supply and demand dynamics. Gold and precious metals are considered safe haven assets, often retaining or increasing in value during economic downturns and periods of inflation. They serve as a hedge against currency fluctuations and market volatility, providing a store of value in uncertain times. Oil and natural gas investments are influenced by geopolitical events, technological advancements, and environmental policies. These energy commodities play a crucial role in the global economy, and their prices can be indicative of economic health and industrial activity. Investing in commodities requires a strategic approach and a thorough understanding of market trends, geopolitical influences, and supply and demand factors. It's essential to consider the volatility and risks associated with commodities, as prices can be susceptible to sudden and significant fluctuations based on global events and market sentiments. Number 4, peer-to-peer. Peer-to-peer P2P lending platforms have revolutionized the lending industry by enabling individuals to lend directly to borrowers, bypassing traditional banking institutions. These platforms offer a marketplace where lenders can earn higher returns on their investments compared to traditional savings or investment vehicles, and borrowers can access funds with potentially lower interest rates or more flexible terms. Investors on peer-to-peer platforms can diversify their portfolios by lending small amounts to multiple borrowers, spreading the risk. They also have the flexibility to choose loans based on their risk tolerance, interest rate preferences, and loan term suitability. However, investing in peer-to-peer lending comes with its own set of risks, such as borrower defaults and platform security. The regulatory environment for P2P lending is also still evolving, adding another layer of consideration for investors. In conclusion, peer-to-peer lending platforms offer an innovative investment opportunity with the potential for attractive returns, but they require careful consideration of risk factors, due diligence in choosing loans, and an understanding of the regulatory landscape. Moving up next on intellectual property. Investing in intellectual property, IP, including patents, copyrights, and trademarks, involves acquiring and leveraging intangible assets that have intrinsic value due to their uniqueness and innovation. These forms of IP serve as legal protections, granting exclusive rights to the owners and enabling them to monetize their creations. Patents protect inventions and innovations, allowing the patent holder to control the use, manufacturing, and sale of the patented invention for a certain period, typically 20 years. Investing in patents can involve funding innovations, licensing patented technologies, or acquiring patents for strategic purposes. Copyrights protect original works of authorship, such as literature, music, and art. Copyright holders have exclusive rights to reproduce, distribute, and display their works. Investing in copyrights can involve acquiring rights to creative works, licensing content, or funding the development of new creative projects. Trademarks protect symbols, names, and slogans used to identify goods and services. Trademarks help build brand identity and recognition in the market. Investing in trademarks can involve building or acquiring brands, licensing brand names, or engaging in branding strategies to enhance business value. Investing in intellectual property requires a strategic approach, thorough due diligence, and an understanding of legal and market considerations. It offers the potential for significant returns through licensing revenues, enhanced brand value, and competitive advantages, but it also involves risks related to market acceptance, legal challenges, and technological advancements. Here are the number 6 residential properties. Investing in residential properties involves purchasing real estate such as houses, apartments, or vacation properties to generate rental income or capital appreciation. This investment allows for steady cash flow and potential long-term gains due to property value appreciation. Commercial properties. Commercial properties include office buildings, retail spaces, warehouses, and more. Investing in commercial real estate often involves longer lease agreements, potentially leading to stable and higher rental income. However, it might require significant management effort and capital investment. Real estate investment trusts, REITs. REITs allow investors to invest in a diversified portfolio of real estate assets without having to physically own or manage the properties. REITs are traded on stock exchanges, offering liquidity and accessibility. They are mandated to distribute a significant portion of their income to shareholders, providing a steady income stream. Real estate investment offers diversification, potential capital appreciation, and rental income. However, it also comes with risks such as market fluctuations, property management challenges, and liquidity constraints. A well-researched strategy considering location, property type, market trends, and financial analysis is crucial for successful real estate investment. Number 7. Stocks, bonds, and mutual funds. Investing in various financial instruments such as stocks, bonds, and mutual funds is a prevalent strategy for wealth accumulation and portfolio diversification. Stocks, representing shares of ownership in a company, offer investors the potential for capital gains and dividends. Although they come with higher volatility and risk, bonds, which are debt securities, provide periodic interest payments to investors and are generally considered more stable and lower risk compared to stocks, but they usually offer lower returns. Mutual funds allow investors to pool their money to invest in a diversified portfolio of stocks, bonds, or other securities managed by professional fund managers. Mutual funds offer diversification and professional management, but also come with management fees and less individual control over the specific holdings in the portfolio. Each of these investment options carries its own set of risks and rewards, and a well-balanced investment portfolio often includes a mix of stocks, bonds, and mutual funds to align with an investor's financial goals and risk tolerance. Another important asset is education and skill. Investing in education and skills through avenues such as professional certifications and specialized online courses is a strategic way to enhance one's career trajectory and marketability. Professional certifications validate expertise in a specific area, bolstering credibility and enhancing job prospects. They often serve as a testament to an individual's commitment to professional growth and mastery of industry-specific knowledge and competencies. Specialized online courses, available on platforms like Udemy and Coursera, offer accessible and flexible learning opportunities. These courses allow individuals to acquire targeted knowledge and skills, ranging from technical proficiencies to soft skills, at their own pace. Such courses are instrumental in keeping up with evolving industry trends and technologies, ensuring that one remains relevant and competitive in the job market. Continuous investment in education and skills through professional certifications and specialized online courses is pivotal for career advancement, lifelong learning, and adaptability in a dynamic professional landscape. Ready for the last one? Digital assets. Digital assets such as websites, domain names, and digital content hold substantial value in the contemporary digital landscape. These assets serve as essential tools for establishing an online presence, reaching global audiences, and generating revenue through various monetization strategies. Websites act as the virtual storefronts or platforms where businesses and individuals can showcase their products, services, or content. They are pivotal for building brand identity, engaging audiences, and facilitating transactions or interactions. There are several methods to monetize a website effectively. Popular strategies include displaying advertisements, engaging in affiliate marketing by promoting third-party products or services and earning commissions for referrals, and selling digital products such as courses and ebooks. These approaches allow website owners to generate revenue by leveraging their site's content, traffic, and online presence. Domain names. Domain names are unique addresses on the internet that represent your online identity or brand. A memorable and relevant domain name can enhance visibility, credibility, and marketing efforts. Selling domain names can be a profitable venture. Individuals can earn revenue by purchasing various promising domain names and later reselling them at a higher value. This business model capitalizes on acquiring domain names that hold potential for future demand, allowing for substantial profits upon resale. Digital content. Digital content encompasses various forms of media such as articles, images, videos, and ebooks. Quality content can attract and engage audiences, enhance SEO efforts, and establish authority or expertise in a particular field. Investing in digital assets is a strategic approach to leveraging the online ecosystem for visibility, audience engagement, and revenue generation. Through thoughtful creation, optimization, and monetization of these assets, individuals and businesses can enhance their digital footprint and unlock various avenues for income and growth. Thank you for watching. Please don't forget to subscribe and turn the notification bell to stay updated with our content. Have a wonderful time. I will see you in the next video.